Something strange is happening inside Canadian banks. More Indian origin executives are rising to power. Canadians feel they're being pushed aside, and at the same time scams and fraud are exploding like never before. But is it really connected or just a dangerous illusion? Let's dive in. Part 1. The Silent Shift. In 2013, Canadians got their first real taste of this controversy when RBC faced public outrage over outsourcing jobs to iGate, an Indian IT firm. Around 50 roles were displaced, sparking a wave of anger that forced the bank's CEO to apologize. Ottawa even reviewed its foreign worker rules. That incident left a permanent scar in the national conversation about who gets to work inside our banks. Outsourcing isn't new, it's a global cost-cutting trend. But Canadian banks leaned heavily on Indian IT giants like Infosys, TCS, and Wipro to handle back-office and tech functions. Analysts estimated the outsourcing bill at around $10 billion annually in the early 2010s. That's not small money, and Canadians began asking, if billions are flowing out, what happens to jobs at home? Despite the backlash, total employment in finance and insurance has actually grown, from about 737,000 in 2019 to over 850,000 in 2023. StatsCan confirms the sector has steadily expanded even during the pandemic years. So while the outsourcing story is real, it doesn't mean Canadians have been completely shut out. It's more complex. Regulators have also adapted. OSFI, Canada's banking watchdog, rolled out stricter rules like Guideline B13, Tech Cyber Risk, and B10, Third-Party Oversight. These demand stronger monitoring of offshore partners, vendor contracts, and cyber safeguards. The message is clear: banks can outsource, but they can't outsource accountability. Meanwhile, the immigration context feeds the narrative. In 2022, 27% of permanent residents and nearly 45% of international students came from India. More Indian origin professionals in Canada naturally means more of them appearing in finance roles. It's not a conspiracy, it's demographics at work. Yet perception is powerful. For ordinary Canadians, seeing high-ranking executives from one community fuels suspicions of a takeover. Combine that with job rejections and public scandals, and the narrative practically writes itself, even if the broader data doesn't confirm it. This is the tension: reality versus perception. The workforce is growing, banks are hiring, but the memory of 2013 and the demographic surge keep feeding the idea of a hidden takeover. And now, with scams rising, Canadians are drawing dangerous connections. Part 2. Canadians left behind. At first glance, the national job market looks troubling. Unemployment hit 6.9% in July 2025, leaving many Canadians anxious about job security. When you can't land a banking job and you hear of offshore hires, it's easy to believe you've been replaced. But zoom into the finance sector, and the numbers tell a different story. In April 2025, finance and insurance added 24,000 new jobs, helping push overall service growth. Clearly, the industry is still expanding. The problem isn't vanishing jobs, it's changing skills. In Ontario, the banking capital, over 678,000 people worked in finance, insurance, and real estate in 2023. That's up year over year, not down. British Columbia also saw gains. So Canadians aren't being systematically locked out. They're struggling to match the new demands. And those demands are high. Compliance with OSFI's new B13 and B10 frameworks means banks now crave cybersecurity experts, data scientists, and AML specialists. These are skills many Canadian grads don't have yet, while global professionals, including Indians, arrive with exactly that training. Public opinion, however, is hardening. By late 2024, nearly 60% of Canadians said the country was bringing in too many immigrants. With study permits slashed in 2025 by roughly 45% compared to 2023, Ottawa is responding, but resentment lingers. Legally, banks can't discriminate. Canada's human rights law forbids rejecting someone based on nationality. But if hiring feels biased, even unintentionally, the damage is done in the court of public opinion. Canadians simply don't believe the system is fair. And that belief gap is dangerous. Because once trust breaks down, every fraud headline feels like confirmation. And the fraud headlines are everywhere. Part 3. The Rise of Scams and AMP. Fraud. In 2024, Canadians reported a record $638 million in losses to fraud, and experts say that's only 5 to 10% of the real number. The true toll may be billions. It's a crisis that hits wallets and confidence. Surveys show 87% of Canadians see scams as a serious threat, and 2/3 have already been targeted. Phishing, impersonation, investment schemes, they're hitting everyone, everywhere. Businesses are under siege too. Interact reports 50% of Canadian companies faced fraud in the past year, losing an average of $7,800 each. Small businesses, already squeezed by inflation, can't afford those hits. The biggest headlines came from TD Bank in 2024. Its U.S. arm admitted to Bank Secrecy Act violations, paying over $3 billion in penalties after failing to stop hundreds of millions in suspicious transactions. That wasn't about nationality, it was about compliance breakdown. Regulators are hitting back. Ottawa is boosting FINTRAC's power, raising penalties 40-fold and forcing beneficial ownership transparency. The fight is on to close the loopholes scammers exploit. The fraud surge, though, feeds the public's suspicions. When people see more foreign executives in banks, they connect dots, even if those dots aren't supported by evidence. It's a classic case of correlation mistaken for causation. And that's the real risk. Canadians start to believe the fraud crisis is caused by who's hired, instead of how institutions manage risk. That belief can divide communities and distract from the real fixes. Part 4. Why this matters to you. Every Canadian feels the pinch. Those $638 million in fraud losses aren't just statistics. They're lost life savings, stolen retirement funds, ruined credit scores. The RCMP warns the psychological toll is just as bad as the financial one. Fraud changes how we live. 13% of Canadians say they've experienced payment fraud recently, and 22% say they risked missing bills out of fear. Imagine hesitating every time you send an e-transfer or pay online. For businesses, it's survival. Half have faced fraud, many eat the costs, and customers pay through higher fees and stricter verification rules. Fraud doesn't just hurt, it spreads costs across the whole economy. For job seekers, the narrative cuts deep. Finance and insurance are still hiring, but the skills are shifting fast. Those who adapt thrive, those who don't feel left behind and point fingers. For investors, scandals like TD's 3B penalty shake confidence. Banks that stumble face growth limits and independent monitors, hurting Canada's financial reputation. And for society, trust is the glue. If Canadians don't trust their banks, their regulators, or their hiring systems, everything frays: our economy, our communities, even our democracy. That's why this debate matters. It's not just jobs versus foreigners or Canadians versus newcomers. It's about protecting trust in the system we all depend on. Part 5. The call for change. First, regulators must keep tightening. OSFI's B10 and B13 are good steps, but they must be enforced relentlessly. Vendor oversight, cyber controls and anti-fraud measures can't be box-ticking exercises. They're the front line of defense. Second, FinTrack needs teeth. Raising penalties 40-fold and forcing beneficial ownership registries is a start, but banks must invest in cutting-edge detection tech, AI that spots suspicious patterns before they snowball. Third, transparency matters. Banks should publish real data on their workforce composition, skills pipelines, and pay equity. The reality. Visible minorities still hold fewer senior roles, not more. Clearing the air with facts beats letting rumors fester. Fourth, Canadians need training pipelines. If jobs demand cyber data and AML skills, then governments, banks and universities must equip locals, not just import talent. That's how you close the perception gap. Fifth, human rights must remain non-negotiable. Canada's law forbids discrimination based on nationality. Blaming one group is both illegal and dangerous. Accountability should focus on institutions, not communities. Sixth, customers need education. The Canadian Bankers Association and Payments Canada are already running fraud awareness campaigns. But banks must speak plainly, not in legalese, if they want Canadians to stay safe. And finally, public conversation must stay honest. Yes, outsourcing, demographics and scams are real challenges. But solving them requires data-driven policies, not scapegoating. If Canadians want secure jobs, safer banks and stronger trust, the answer is reform, not division. Canadian banks are changing. Outsourcing is real, immigration is rising, and scams are spreading. But blaming entire communities won't solve it. The real battle is for stronger oversight, better training, and smarter fraud prevention. If you believe Canadians deserve both fair opportunities and secure banks, share this video, leave your thoughts in the comments, and hit that subscribe button, because together, exposing the truth is the first step to fixing it.